What is going on, everybody? We are back again with another video, and in today's video I'm going to show you guys how I made $550 today trading the NASDAQ using this exact strategy. It is going to be a market maker buy model and the forever model overview, and it is on NASDAQ longs that I took. Now, like always, we are starting with a daily chart, and I'm looking at the NASDAQ on the left and the S&P 500 on the right. So do annotations of what you can see from the chart here, and I will show my annotations on the next slide. All right, so if you had the annotations marked off properly, what I did here was I marked off the correlated lows, and you can see that the NASDAQ actually ran the lows here compared to the S&P 500, which failed to do so, creating the higher low on the daily. But what I also did was I marked off premium and discount from this impulse high to this impulse low. And we are currently trading in a discount of that dealing range. So what I'm anticipating here on the NASDAQ and the S&P 500 is for it to draw back up into premium, because always remember this, you want to be buying in a discount and you want to be selling in a premium. So I want to be looking for longs back up into premium of the range. So now that we covered the daily, what I'm going to do here is cover intermediate term perspectives like the 4-hour and the 1-hour. So that is what I'm going to be utilizing as key levels to then frame short-term perspective trades. I'm simply using the daily as a base narrative to understand that I'm looking for higher prices based off of my higher time frame bias. Now the same thing here. We're looking at the 4-hour, and I want you guys to mark off annotations based off of what you see here compared to what we did on the last slide. So pause the video, mark your chart up before I show mine on the next slide. So if you had it marked off properly, I was looking at the NASDAQ on the left, and we had a low that was created here that made a higher low compared to the S&P 500, making a lower low. And you could see that price overnight closed above that down close candle that ran that external range liquidity and created the daily SMT. So this was an indication of a 4-hour change in state of delivery, also creating a 4-hour bullish order block that could be utilized as support for higher prices, as well as trading through this old bullish fair value gap that could be treated as an inversion for also more support and more catalyst to drive price to that daily premium of the range. So what I'm simply doing here is I'm just trying to make sure that my intermediate term perspective is just keeping in alignment with my daily draw to the daily premium of the daily dealing range. So basically what I'm doing here is I'm making sure that my intermediate term perspective is just structurally in alignment with the daily draw to that premium range. So let's monitor price now on the hourly chart. So here is the hourly, and I want you to do the same thing that we did on the 4-hour. Mark up any annotations that you see off the top of your head before I show my annotations on the next slide. So if you had it marked off properly, you can see here that at equities open, which is this vertical line that we have marked off here, we have smooth relative equal highs. That is not SMT. And we also have a SMT at lows post 9:30 open that ran short-term low here on both the NASDAQ and the S&P inside of an hourly bullish fair value gap. So with these resting highs that are not SMT, that are relative equals, looked at as an original consolidation draw on liquidity, resting right below daily premium, which is what we were looking at on the daily chart, giving our bullish bias, I'm looking for higher prices buying in this discounted swing, utilizing my intermediate term perspectives as key levels to then frame short-term perspective market maker buy models. Now, the example that I'm going to show you on the next slide is just an educational purpose. This trade I did not take. I did miss this entry actually, but it is a perfect example for you guys to understand how to frame these trades from intermediate term perspective key levels to short term perspective market maker models, exactly how the forever model can be fractalized. We're utilizing an hourly bullish fair value gap and then gonna frame a M5 market maker buy model off of the hourly bullish fair value gap. And NASDAQ was the weaker pair and the S&P was the stronger pair. So if we were to take a trade on this, it would be on the S&P. So here's the 5-minute chart, NASDAQ on the left, S&P 500 on the right. This is what price did right after equities open. We dropped, we created that hourly SMT inside of the hourly bullish fair value gap. So what are we going to look for next? We're looking for a reaction off of that hourly internal range liquidity pool on our M5 chart. We need a change in state of delivery, and boom, the next candle we get a change in state of delivery after the run of that short-term low. On the S&P 500, it is the stronger pair. We have a confirmation of a change in state of delivery here with an order block, so this can be utilized as an entry long to that relative equal high draw that we have labeled here. So all I'm going to do next is put a long entry right at the tag of when price comes in to that order block or change in state of delivery candle. And you can see the next candle, we tap it and it's energetically displacing higher. You can see how sensitive these candles are with price. This is a true change in state of delivery. This is a high probability bullish order block. And you can even see that NASDAQ follows and reciprocates and it has its own change in state of delivery. But we would already be in the trade on the S&P 500 because this is the stronger pair. And you can see we reach a 1 to 2 risk to reward. And what you can do is following price getting a 1 to 2, you could just simply take a partial of your position off, or you can close the full position. But if you take a partial, you could put your position at break even and then leave a runner to the relative equal high draw, the original consolidation we labeled before. You could see price just runs immediately to those resting highs. Now, what I wanted to show you guys is a depiction of the market maker buy model. I made a video about this before. I'll leave a link to that in the description of this video. And we now know that the S&P 500 took out the highs, but the NASDAQ did not. Now, since both the S&P 500 and the NASDAQ are still in discount of that daily dealing range, I'm still going to anticipate the NASDAQ to play catch up and continue completing its market maker buy model. I'm not looking for a reversal for price to reverse in discount. I would understand for a reversal if we were in premium of that daily dealing range. But since we have not reached premium, I'm still going to look for longs for NASDAQ to complete its market maker buy model like the S&P 500 did. So we already had our smart money reversal, price tagging that internal range liquidity, and we had our low risk buy. Now what we're looking for further on into the model, we're looking for reaccumulation and accumulation stages of the market maker buy model for NASDAQ to take out the external range high. So this is what we're going to look for price to capitalize on an entry point. So compare the last depiction to this chart on the NASDAQ on the left and the S&P 500 on the right. We had our low risk buy here. We had our smart money reversal here. We have accumulation here. Now, what are we getting now? Reaccumulation inside of a fair value gap here that has support with the mitigation block. But I want you to bring your attention inside of this tag of the M15 bullish fair value gap. Look at it very closely before I show you the annotations on the next slide. I hope you guys can see that, but there was SMT divergence inside of that M15 bullish fair value gap. Now, if you guys understand time frame alignment, we have to go from the M15 key level to an M1 market maker model. We have an internal range liquidity pool with SMT. Step 1 and step 2. Now we go to the aligned time frame, the M1 chart, and we look for a market maker model, change in state of delivery, execution to then take out the external high. That is what we're going to do next. Here is price inside of that M15 bullish fair value gap. You can see the NASDAQ makes the higher low compared to the S&P making the lower low inside of that gap. So which pair am I going to want to trade? I want to trade the NASDAQ because it's making a higher low. But if you look even closer, Watch this. The NASDAQ sweeps a short-term low resting here that creates the higher time frame M15 SMT inside of that M15 bullish fair value gap. Then the next M1 candle closes above that down close, confirming an order block and a change in state of delivery here. Now all we need to do here is literally just put in a limit to long when price retraces into that order block that created the change in state of delivery and the M15 SMT divergence. Price tags us in here, and we simply just look for a 1 to 2 risk to reward, and then we can leave a runner to the external range target, the original consolidation high. And as simple as that, price reaches a 1 to 2. Now you can close the position fully, or like I said before, leave a runner to that original consolidation high with your stop loss at break even. Simple, smooth process, very little steps behind this. This checklist can literally fit on a business card or a post-it note from how simplistic and simplified this price delivery can be. So here are my executions, and this is the P&L with some other Discord members that have been utilizing these concepts and truly understanding how simplistic it is for the price delivery of the forever model and fractalizing it. So if you are interested in joining the Discord, there is a free chat and as well as a free 7-day trial to premium that you can then see me trade live, as well as have unlimited one-on-one access to me for any questions need be. And it's just a community of like-minded individuals that all trade the exact same way. So if you are interested, just click the link in the description and it will give you direct access and an invitation. But like always, guys, I hope you enjoyed, you learned something from the video, and I will catch you guys in the next one.